All right, hey, welcome to this week's Gravity live stream. I'm Shane, this is my partner Richard, and we are the Rogue Traders, and we talk about Bitcoin. We have a little fun on Gravity, so we talk about the trades we've got on and the direction we think it's going to go. And today we're going to talk about some other crypto assets as well, because, Bitcoin's at, I'm going to say, an inflection point. It's at a moment of indecision. There's a lot of I think there's a lot of questions right now for a lot of people in Bitcoin, and you could probably say that for the other major like Ethereum as well. So why don't we get started? Let's take a look at the chart and see where we're at from last week. Let me just switch the over to the screen. All right, so here's the Bitcoin chart. And here we are right now. We're, what is this? 90,000 and 90,000, let's say. So last week when we did the live stream, we were up here around 92, 93. And we felt that, we didn't have a strong position on up or down. But we did feel that there's a good chance they're going to do a gamma squeeze. There's a lot of open interest. There's a lot of max pain up at 100,000, 105,000, even 110 or 8, something like that. We can take a look at that in a minute. And we think there's still a good chance. Like every time Bitcoin pushes up to 93, 94, I mean, we're really just a chip shot away from $100,000. It could be there that fast. And we know there's so much gamma up there. There's so much short calls there. Stop orders, all kinds of stuff that you could really see a squeeze happening. But I am completely unconvinced right now. I think we're going to do it. And I think there's a good chance we're going to do it in December. But we're at a point right now where, if it drops down to 85 right now, we're going to be scared 80,000 is coming up. And then what? So right now, I think we don't have any positions on. We did have a small position. We were long around 84, and we sold it up at 94. So we can see we just got a small buy order sitting down here around 88, 89. I'm happy to accumulate it if it drops down here, and then sell it when it gets up here. But I don't have a strong conviction right now, up or down, and I don't think a lot of people do. I think a lot of people are very hesitant right now to the direction.
That was our position last week as well. We were saying we think we're in a range, but it's difficult to tell. We're not really taking any strong conviction either direction until we see a breakout, and we haven't seen a breakout. We've seen some choppy moves around the FOMC and scares around MicroStrategy, and then a few DATs buying and a few DATs selling, and it's just been unconvincing.
And after last week's call, we had that sharp move. For some reason, it just dropped straight down to 88 or something. Went sideways for a while, then shot back up. And honestly, since the weekend, the markets have been flat because everybody's been waiting on the FOMC meeting, which happened yesterday, and they did the expected rate cut.
And I think you cannot get away from the fact that Bitcoin is now enveloped by the financial system. It's no longer the counter currency. It's no, if you're going to onboard or offboard Bitcoin, you've got to go through KYC. What Wall Street or the financial system thinks about Bitcoin matters. And I think right now they don't know what to think. And so that's what's driving the sort of indecision, choppiness, and so on.
And you have to think to yourself, if you're going to buy Bitcoin, if you're a retail investor, what advantage is there? Well, the only advantage is you think it's going to go up.
Right.
But it doesn't give you a dividend. There's no other reason to own it except you think it's going to appreciate in value. But you've got this strange asset which has now been, like you said, enveloped into the financial system. You've got whales who still can affect the price very quickly.
Yeah.
Most of retail doesn't really hold it. You've got guys like Michael Saylor who are accumulating massive amounts of it. When you get that concentration in a few hands,
that's risky.
It's going to add to volatility, And I think that all you can do is right now, any extreme dips we're going to buy, any extreme moves up we're going to sell.
Yeah.
I think right now to take a heavy position, unless you're convinced for some reason or other it's going down or up, then take a heavier position. Other than that, there's no way I would stick my neck out right now at this price level while it doesn't know where it's going.
Yeah. No, I agree. So actually, that almost segues into something else we were going to talk about, doesn't it? Which is Bitcoin's been enveloped by the financial system. Your reason for buying it was an inflation hedge, store of value. Governments can't be trusted with money. But there's another store of value which is like that, which is called gold. Now, a Bitcoin maxi will argue that yes, but you can take a Bitcoin across a war zone because you can keep it in your head. And a Bitcoin minimalist will say yes, but you can also be tortured for your Bitcoin.
Sure.
And at some point, you're still going to have to meet the financial system to convert that Bitcoin to something you can spend. So, interestingly, Gravity have just launched PAX Gold as an asset class, and I'm a huge fan of this. I'm a massive gold bug, so I don't mind telling you that. And I own a lot of gold, and I keep buying it. And if you look at this chart, it doesn't tell you much because PAX Gold has only been traded on Gravity for a few days. However, if you look at this chart, gold has been going up all year.
Sure, yeah. And this is just Yahoo Finance, just to take a look at the price of gold. This is the year-to-date chart. We could even look at a 5-year just to get an idea of the uptrend. Now, this is not a surprise, especially to all the Asian viewers who are generally more in tune with the price of gold.
Yeah. So, and as we can actually see, for 3 years of the past 5 years, gold pretty much did nothing, and it does this because when everyone's happy with the financial system, no one thinks about buying gold, and then suddenly people start getting concerned about inflation and money printing, and suddenly they start piling into gold. So I feel about gold the way a lot of maxis feel about Bitcoin. So being able to trade gold on chain is useful. So PAX Gold is a token which represents physical ownership of gold. I think it's a London vault from memory, and you can actually redeem your PAX tokens for gold bars. You have to redeem them in lots of 430 PAX Gold tokens, which is about $1.8 million, and then they give you a gold bar, like a proper.
So once you have 1.8 million worth of PAXG, you can go to London and you can convert that to a gold bar.
Yeah, and they'll send it to you by an airplane with insurance and stuff if you want. But so for me, this is actually a really cool asset because it means now we can trade the volatility of Bitcoin and Ethereum and Solana in this imaginary world, and we can also touch the real world because everybody wears gold. Everyone uses gold for. A lot of people in the world use gold for buying marriage rights. Central banks use gold as collateral, and they're doing so increasingly. And so there's actually we are going to take advantage of this facility on Gravity to use gold to improve our returns in our Gravity fund, as well as to augment our Bitcoin trading.
I think the natural question is someone says, okay, well, hey, I like this PAXG. The thing is PAXG, I mean, you could trade it just for profit, buy low, sell high, scalp it, but it's not really that type of an asset. It doesn't lend itself to that. There's going to be times when gold gets volatile, and you can do that. But, as far as you're concerned, it's more of one of those things, just buy the accumulate and hold.
I can tell you with absolute certainty that within the next couple of years, gold is going to be trading at something like $20,000 an ounce. And it's currently trading at $4,000 an ounce.
So the only thing you could do in your mind is probably DCA, dollar cost averaging, or buy dips anytime.
I mean, if you're going to speculate, silver's better because you get more sort of squeezes in silver.
I don't think there's any silver. No, there's not.
No, there are. I think there are some silver tokens, but they're not as popular.
Not on Gravity.
And gold does get squeezes, but they tend to be massive, monumental squeezes. And then we had a little one actually. Just I'm not trying to point, but there. That was a
bit of a squeeze there.
This was around the news that the London vaults were running out of gold and had to ship gold back and forth to America and so on. And so that
just taking a look at the silver chart here.
So silver is much more volatile, so much more tradable. And I don't mess about. As far as I'm concerned, my stash of gold is my future pension, and so I don't mess about with it. I just buy some every week or month whenever I get some spare money. And I think that strategy for the next two years is a good strategy. Actually, just go long is a good strategy.
Yeah.
So having a bedrock of gold in our fund, I think, is going to be useful, and then use the volatility of Bitcoin to augment that.
So what we'll need to do is we'll need to sit down and decide, okay, each month out of the profits we're making trading Bitcoin, how much we're going to allocate to PAXG to accumulate. Geez, we need to accumulate $1.8 million worth of it in order to get a gold bar.
Yeah, well, once we get our fund to say 5 million, we can redeem the gold bar and we can have it here on the desk.
Well, that'd be cool. Have a gold bar. Of course, people will say, "Hey, where's your office?"
Yeah.
And they'll start showing up and try and steal our gold bar.
Well, that's the problem. That is the one problem with gold is the same as the problem with Bitcoin, which is self-custody guarantees you being kidnapped.
Well, what we'll do is we'll buy a tungsten bar and we'll paint it gold, and that'll be for our display purposes, and the real gold will be in the vault. All right. So let's get back to talking about Bitcoin. Again, we're at a very fragile point of the market where nobody knows. 100 could easily happen. 80 could happen. And until then, we'll just trade lightly. We'll buy the dips. We'll scale it. Once it come down to here, I'll scale in and buy. My average price will probably be up here. And then I'll sell it as it goes up here.
I wanted to talk about a little bit about the macroeconomic situation.
Okay.
Because I think that's relevant to all of this. So last night we had the FOMC meeting, and they, as expected, reduced rates again in the US, which of course will have contagion across the world. But it's interesting that the bond market doesn't agree. So bond yields still remain higher than the Fed rate. Stocks, precious metals responded by going up on the announcement. But Bitcoin didn't. Bitcoin kind of went down.
Dropped a little bit, that's this drop here, the FOMC.
That concerned me because that makes me that cemented in my mind this idea that whereas in the past the majority of Bitcoin traders and holders were pro-Bitcoin people who traded Bitcoin on Bitcoin exchanges, I believe that now the majority of traders are actually trading through regulated instruments like IB ETF and so on. And they are far more dominant in their pricing power, and they're far less likely to believe in the long-term value of Bitcoin. They just see it as a volatile thing to trade. So this, at the moment, I think the regulated markets don't see Bitcoin as a store of value. They just see it as a risk thing, which is why we're seeing this sort of disconnect between, say, the price of silver and the price of
because if it was truly a store of value, it should have rose with the price of gold and silver.
Because along with the announcement that interest rates went down, the Powell speech was also kind of hinting that we're entering a phase of sort of QE light. So and we all know where that leads. And in fact, if you look at the state of the US economy, the average person is unable to afford to feed their family these days, whereas the super rich people who own hedge funds and banks are perfectly fine, thanks very much. So we're kind of heading towards a sort of a 1970s style stagflation scenario, or maybe heading towards a 1929 style sort of terrible liquidity crunch. We're not sure yet. But markets are skittish about this, and it just occurred to me this morning that I was wondering what had driven the massive AI bubble we've seen. I don't believe it's the belief that AI is going to solve our future for us and make us all rich. I think that's nonsense. And if you look at the economics of the AI build out, these things can never make any money. So it's kind of like the .com. Everyone was laying fiber in the .com boom, and they only started making money from it 20 years later. I think what's happened is that we've had such massive QE as a result of the 2008 housing crisis and the COVID crisis and all the other manufactured crises. But all that quantitative easing went into banks and then into hedge funds and into VCs. It didn't go into the people in the street, other than the stimmy checks that caused the boom in 2021. And people have often wondered where's that money gone? Why hasn't it caused inflation? Well, I'll tell you where that money's gone. It's gone into multi-trillion investments into AI, which are going to pay zero. And so all of that QE is essentially wasted and just waiting to be evaporated on the stock market in QE AI investments. And so the next lot of QE, the question is that going to go into banks or is that going to go into people's pockets? And if it doesn't go into people's pockets, then we're into a horrible scenario where people definitely can't afford Bitcoin because they can't afford to feed their families first, right? So I think the markets are worried about that and becoming more worried about that.
Yeah.
I've been concerned about it for some time, but markets are more short term thinking. But I think that's the future we face, and that's depending on whether Bitcoin gets seen as a risk asset or a store of value hedge asset.
Yeah.
That will determine whether we see Bitcoin at 150k or Bitcoin at 50k in 6 months' time.
Yeah, and it really does feel like a crapshoot either way.
Yeah.
There's good reasons it could go up, and there's good reasons it could just plummet. Well, I don't necessarily think it'll just drop to 25,000 or something. I know there's some people out there talking about that. I think that if it does go down that low, and it could, it'll be a process. It'll take some time to do that, and there's some good longs.
There'll be a fight because you'll have the likes of Sailor buying into the dips, and the counter argument is that Vanguard have recommended to their salespeople that they persuade Vanguard customers to put 2 to 4% into Bitcoin, or into digital assets, shall we say. JP Morgan have their own Bitcoin treasury play coming out, so there's corporate backing for all this stuff, but and so that's the bull argument, and then the bear argument is but if people just go risk off, then that's it.
And the other thing too that we talked about is there going to be another big altcoin season?
Right.
And there could be. I think it's going to be, if it does happen, it'll be a more limited version of the previous. But there's a good chance it just won't. Everybody realizes that almost all crypto is useless. And it's just designed to make the crypto founders rich. And I think that everybody's over. That's not to say there's not going to be different altcoins that do very well and have utility, absolutely. But if people are waiting for that general thing to raise everything and get 1,000 or 2,000% returns like they might have expected 4 or 5 years ago, I think those days are gone. Personally,
no, we the rogue traders intend to launch a token next year, which is a pure utility token, which we think will be worth owning because it gives you actual utility that you can use to improve your life. But I think most of them are 99% or more of tokens are nothing more than speculative nonsense.
It is word salad. Let's take a quick look at the liquidity heat map just to see what we might expect short term here. I just updated this a few minutes ago. We can see there's just a little bit of liquidity in 24 hours down 89,000 and at 91. No surprise, right in the range, nothing.
And actually, it was interesting that this. Again, I'm pointing at the screen. This area here. Yesterday, that was all yellow. And sure enough, after the announcement, we wicked down through it and took it all out.
3 days out, all we just 89,000 liquidity there. So
it's funny, isn't it? It's like no one's taking any positions at all.
No, and if let's just take a look at 1 month out, for example. Hey, it's to the upside. Right.
Well, I think the market is the liquidation analysis engines are seeing all of that call interest up at 95 to 105k and seeing that as a risk because people have to, dealers have to hedge that.
So if we do run up through 95 to 98, for example, then this 100 is going to come into play, and we can see that on the max pain chart. We can see here's the expiry for December, and the max pain is 100,000, same as it was last week. A lot of open interest here compared to the other months, so it makes sense. They're going to push this. They're going to punch it on the gamma.
It's interesting to me that hasn't moved because you kind of expect with Bitcoin hanging out down here for a week, people would be selling calls at like 95k, and yet they're not. So it's like, and so that intuitively tells me that people are afraid of a pump up, therefore won't sell 95 calls. Which means that we're not going to get a pump up because everyone's afraid of it.
It could be, and we said at the beginning of the show that if we get up to 93, 94, it feels like 100,000 is just a chip shot. It's a very short, quick move, and boom, it'll happen super fast if it does happen.
Well, I thought of that over the past few days because I remember you saying that, and then we did get up to almost 94k, didn't we? Or 94 and a bit.
Yeah, we did.
And I remember thinking, should I hedge my book? Because Shane said if we get to 94, then the sky's the limit. And I didn't hedge my book, and sure enough, we sold off within the same hour.
Yeah, we got up to what is that? 94 change?
Yeah, 94.4.
Yeah. Okay, so 94 and a half basically. Got there once, got there twice, and
firmly rejected both times.
Yeah.
It's funny. This line across here. It's like
just a
massive
sideways channel. Yeah. I mean, there's quite a range to it. 94 on the upside, sort of 84, 85 on the downside. So it's about a $10,000 range from the extremes. But I think that for now we're just going to play that range. You want to dip down here? I'm going to buy it.
Yeah.
If it wants to go up here, I'm not going to short it probably. Because I'm a little bit wary of that gamma squeeze.
Yeah.
In fact, I've got no problem punching long. If it wants to go here, I'll just accumulate long and run it up to 100K. Why don't we take a look at the immersive to give ourselves an idea of what the volatility surface is telling us? If it can load here.
I think I know that
Might need to refresh the page.
yeah, Deribit went down for maintenance today, so I wonder if there we go.
There we go. Yeah.
Alrighty, well, it's actually the exact same situation as last week. We've got this 25 risk reversals at minus 5%, the 10 delta risk reversals at minus 10%. This actually is probably getting more bearish for longer day. I think people are giving up on the idea that we're going to rally in next year. Or the options market is telling us that people are giving us up on that idea. And of course, markets are perverse, so they can often do the opposite of what people think. But right now, sentiment is definitely defending the downside all the way out to September next year. Yeah.
Wow. Okay.
Yeah.
Yeah. Yeah. I wish I had something definitive to say, I'm doing this and I think it's going to do that, but I just don't have that conviction now. I could see it doing either side.
No, I think I suspect that liquidity is low and trading volume is low, and so I actually think if you go back to the gravity chart, I have to expand it again. I just think that we have to just wait for news and trade the news. I
wait for catalysts and then take advantage of it.
Yeah.
And we can see it's been a week and it's done nothing.
If some digital asset treasury has to sell a bunch of Bitcoin, then it's going to pump the price down. If some asset treasury wants to go and buy some, it's going to push the price up. I think we can.
If you're trading options, if you want to put on an option trade right now, maybe I'd put on a short dated iron condor, nothing heavy, so that if you do get in trouble on one side, you can roll it away, so you can earn a little bit of theta decay. If you're trading futures, I'm just going to buy the dips right now and then sell at the mid to top level of the range. So if it drops down to 86, 87, I'm going to buy it. I'll be selling at 89, 90, 91, 92 on the way back up. Until it decides to do something.
Yeah,
that's the only way I can think of generating cash right now from the futures market.
Yeah, I mean, I think we need to know whether there's going to be a war in Venezuela. We need to know whether the Ukraine war is going to start or stop. We need to.
We've got the Cambodia thing going on now.
Yeah. Thailand and Cambodia started fighting.
Yeah.
That's I'd forgotten about that because I read about there was a border skirmish, wasn't there, last year?
Yeah.
This year, but
yeah.
Yeah, that's a shame. I was in Thailand just last year. Yeah.
I don't think it's affected Bangkok yet.
No. Okay. So yeah, uncertain. Everything's uncertain. Waiting for news, right?
Yeah, and a lot of times as a trader, you just got to be patient. And when there's uncertainty, sometimes the best thing you can do is nothing. If you feel you need to do something, great. If you're trading options, again, a light iron condor, earn a little bit, but just wait for the opportunities. And there's going to be.
Yeah.
There will be. It might be tomorrow, it might be next week, but there will be opportunities.
The old saying, it's better to be out wishing you were in than in wishing you were out.
Mm-hmm. That's right. That's right. All right, I think that's all we got for today. PAXG, an exciting new product that Gravity is offering, where you can accumulate gold, and it's tied to physical gold, not paper gold.
Yeah.
So you can actually redeem it at some point in the future if you have enough of it.
But also, I mean, many of the people listening are never going to accumulate 340 ounces of gold, but the fact that it is tied to physical gold means that you can rely on the price of the token accurately reflecting the price of gold, which is a nice feature of the token.
Yeah, excellent. So I think we're going to start to incorporate something into our strategy where we'll slowly accumulate it, and as our fund grows, we'll accumulate more and more of it until we can. Our goal should be within a few years to go and get a big bar of gold from London. What do you think?
Yeah, definitely. Yeah,
that'd be fun.
Yeah.
All right, that's it for this week. Happy trading. We'll see you next week.